Hey, Jonathan from NorfolkFXTrade.com. Now in this video today, I'm going to be sharing with you that set and forget strategy. Now it's exactly as it sounds. You're going to be setting your trades, walking away and let the market do its thing. Now by the end of this video, you're going to have a good idea of what the set and forget strategy is and how you'll be able to apply it in your trading from today. Okay, so let's get into this video straight away and let's talk about what the set and forget strategy is. Now, the set and forget strategy is to be used with the trend. So the first thing you need to understand is we need to apply it with a trend. Now, the trend, if you haven't already gone through that video on how to determine trends using supply and demand, then I'll leave a link above now so you can watch that video. Understanding how the trends are formed with supply and demand will give you a heads up on how to find a trend before you start using set and forget strategy. But an entry must only be used with the trend. We're not taking a reversal with a set and forget strategy. We want the trend to be on our side when taking that trade. Now I'll go through in a moment exactly how that would look. So that's the first point. The second point we need to look at is when taking a trade with a set and forget strategy, we need to be coming off a fresh zone. The fresh and tested areas of supply and demand. There is a video that I've done previously on that as well. Now if you haven't seen that video, once again I'll leave a link above now so you can watch that video if you wish first. Just remember, you need a good understanding of a fresh area of supply or demand, what looks like when taking this strategy. And you need to be making sure you're going with the trend. Now there's much more to it than just that. So number 3, what is the next important part? The next important part to the set and forget strategy, number 3, is you will use limit orders. You're going to use limit orders. Now that means buy and sell limit orders. You will also be placing your stop loss ahead of time and your target. So this is a total, complete set and forget strategy. You will be placing your entry, using a limit order, placing your stop loss, and you'll take profit. Now more later in this video, exactly how you'll place those areas. So what is number 4? Number 4 is going to be the risk or slash money management. Important with this strategy is to understand the risk and money management side. Now I may do a future video on money management. So if that's something that you think is going to help you with your trading and supply and demand, then leave a comment below saying yes please, and I would look at doing a video in the future. But briefly we'll cover money management in this video. So first I'm going to go through trends, exactly why it's important with this strategy. Then we're going to go through the fresh area of supply and demand, also why it's important with this strategy. And then we'll go through the limit orders with your stop loss, your take profit areas, and how you'll be applying those when taking a trade. And then finally, I will talk briefly about the risk management and exactly how you'll use that with this strategy. Now remember, as I said in the beginning of this video, you need to have a good understanding of the trends with supply and demand and those fresh areas of supply and demand. So make sure you watch those videos either after this video or you watch them first now. Now you also need a good understanding of how to find, identify and draw those zones as well. That is going to be something that you can watch at the beginning of this series of my supply and demand videos. You'll find there's a couple of videos at the start where you'll be able to watch those as well. Now I will leave those linked below in the description of this video, but the idea is this is the main section when it comes to taking a set and forget strategy. But if you don't know how to draw those zones and identify and find them correctly on your charts, there's no point even trying to do this because you need to know that first. So just remember this order, and we're now going to go through the trend first. So trends. I'm going to base everything on a demand zone, but just remember the opposite will be true when you're looking to self-supply. So when we're looking for a trend, we're looking for the market to reversal. What I'm looking for is when the market comes down into perhaps a large area of a weekly demand, we're normally looking for the market to bounce off and reverse off a higher time frame. And that comes into those multiple time frames and what is the best time frame to trade. Again, if you haven't watched that video, do suggest going back and watching that video. I will leave a link above now for that one as well. So what we're looking for is the reversal to happen out of this area of weekly demand. You want to see the market rally up, removing a previous high, which was also going to be an area of supply. So what we're looking for is the removal of that supply zone. That's going to create a new area of daily demand. Now we're not actually trending at this stage. We're just identifying a reversal. What do we need to see for a trend? Well, if you've been through that video on determining a trend with supply and demand, we need to see new areas of demand being created, and we need to see them being respected, holding price up. So what we need to see next is the market come back, show us that the bulls have turned up at this demand zone. It's then pushed the market higher, breaking the previous high, creating a new area of demand. Now, this is the start of our trend, and this will be the first area we can look to take a set and forget strategy at. Now, remember, this has to be a fresh area of demand to take this trade. That comes into the second step of understanding this reversal, that we need a fresh area once the trend has developed. Now what I'm briefly going to do, I'm just going to take this off and I'm going to do it with some candles on the whiteboard so perhaps you can understand better with candles. So remember this same sequence, we're just going to do it with some candles to make it a bit more clear for you to understand. So if we see the market, first we'll drop down into the weekly area. So this is going to be our weekly area of, let's just do a bullish candle first, and then we'll make this our area of supply. Now this will be what we call the drop base drop, but this will be an area of supply on the daily. We're going to have a larger area of demand here, which is the weekly demand. This is where the market has now been in a downwards trend, approaching an area of demand on a higher time frame. We've come into this higher time frame. Now we start to look for signs of reversals. We want to see the market coming out of this higher time frame of weekly demand. Now we haven't created any areas of demand yet until what? The market must rally up, removing those previous highs of that area of supply and this supply zone. Once this supply zone's been removed, we create this first area of daily demand. Remember I went through in that sketch just previously. This is our first area of demand. This is where we start to see the reversal of the market. This is not a new trend. We are not yet on number one. We're looking for that first stage to be the trend. We haven't yet got to that. So what we need to see now is the market to drop back down. At this point, we drop into this area of demand. Now we need to see this demand hold price. We want to see this demand zone respect and hold the market and push it back higher. Once we see this, we've gone into that one. Once we see this, this will create a new area of demand. And as long as this area is fresh, which if you've gone through that fresh and tested area of supply and demand, you can see that is a fresh zone. And this is where we will then look for placing our limit order, so which is then going to be set right here for buy. You'll place your stop below this area of demand plus a few pips. So this will be your stop loss. And then I'll go through how you will look for the targets in a moment. So we have our first reason, the trend. This has been a reversal. Remember, we have price dropping down, making this area of supply. We drop into a weekly area of demand. we see the market rallying out, removing this supply zone, creating a new area of demand. Then we pull back into that demand, we respect it, we rally back out, creating a new area of demand. This is the sequence that the trend is forming. We are seeing a reversal, a new trend forming off a higher time frame. Multiple time frame analysis. And if you haven't watched that video on what is the best time to trade with multiple time frames, go back and watch those as well. Now we're looking for the market to come back for our buy limit order. This is going to be our buy. Right here, our stop loss, and now I'll go through how you look to take profit. Now just remember the exact same opposite would apply to an area of supply, and we'd just be looking for a sell limit order instead. So that is exactly the steps we would look to use a sell and forget strategy. Remember, we're looking for the trend, we're looking for a fresh area of supply and demand, then we're going to place our limit order. And then finally, we're going to look to use the correct money management. So let's just go, and I'll remove it from off this whiteboard, and then I'll come back and we'll go through the actual use of money management and where you look to take those profits using this set and forget strategy. Right, okay, so let's now go into first where those profit targets will be using this strategy. So once we have, and we're going to use just the markets come out, we've dropped back in. This is our first area of demand. We've tested it. So this is now the reversal. And then we've gone up and we've created this new area of demand. It's a fresh demand zone. So what we're looking for is when the market comes back, we've placed our buy limit order right here. Our stop loss is below this zone, plus a few pips. We can have three options now to look to take profit. The first one is going to be we're looking for a 2-to-1, 3-to-1 risk to reward. Now I do not suggest using this strategy unless you have room for a 2-to-1 risk to reward. That's your first way. Now the second one would be to look at the previous high. So in this case, the previous high, because we're coming off a demand zone. So we're looking at the swing high where the market came back into demand. That will be your target. So that's the second way to look for the target. Now the third and final way to look for a profit target would be an area of supply. Now using an area of supply will give you the highest risk to reward on the trade. Not always going to give you the profit, but it's a good way to look for the highest risk to reward. Now using an area of supply is basically going to be from the previous area of supply where the market has not yet gone into. Now you're looking for the market to remove those previous highs and to go up into this area of supply for your final target. So they are the targets you could use with a set and forget strategy. So now we've gone through how to find a setup, how to approach placing your orders, and now we've gone to how to find your targets. Now the final section of this video is going to be the most important, why I've left it till last to go through. That is the money management. So let me just remove this quickly and we'll go through the final part now of money management. Now I don't know what else you've learned in your trading, but what I suggest is you never risk more than 2% per trade. So 2% per trade on your account. Now, if you're just starting out, I suggest just 1% per trade. But if you've been trading for some time, you have some experience in the market, then I can say 2% max per trade. And never risk more than 6% at any one time. What this is going to do, it's going to just stop you from blowing your account. The idea is you're going to be looking for around about a 4 to 6% profit per trade. Now over time, that is going to gradually increase your account. Understanding good risk management. Never go out and revenge trade. Don't look to lose this trade and then go and try and trade with a 4% thinking you win it back, because it won't work like that and you will lose more and more. And that's how you eventually blow your account. So the final section is to remember we're only risking a 2% maximum per trade, 6% maximum at any time, which means 3 trades at once. I hope in today's video you've had a good insight on how to use the set and forget strategy with supply and demand. I suggest you use it on a daily time frame, so you learn how to use a set and forget strategy. Now, I'm not saying it can't be used on lower time frames, but just start on a daily time frame. Use multiple time frame analysis for that best time frame to trade with. And remember, you have to use the trend and those fresh areas of supply and demand. And more importantly, don't forget about this money management. So now you have a full working strategy to apply in your trading with supply and demand. Now, I hope you've enjoyed this video today. If you have, please like the video. And if you're not already subscribed to the channel and you want to catch more content like this, don't forget to hit that subscribe button right now and hit the bell notification button, because then you'll be notified the next time I release another video. And if you keep watching, you'll see pop up in a moment will be the next video that you can go through and watch.